And just like that, it's as if the coronavirus didn't even happen, at least according to the stock market in the United States. Today we did set a brand new all-time record high, both on an intraday and a closing basis for the S&P 500. So when they say stocks go up over the long term, I suppose this should not be all that surprising. I think it was how quickly the recovery took place since March that is noteworthy in this case. But I want to talk about that tonight, and I want to also get into why it may not be all roses out there. We actually saw the Dow Jones Industrial Average and the Russell 2000 close lower today, despite the S&P 500 and the NASDAQ both hitting all-time highs. Also want to get into an indicator of breadth to show you one area where maybe the bulls didn't win the day as much as they thought they did. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 18th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, check out our description area so you can sign up for our email distribution list as well. We're also heavy users of Twitter. Feel free to follow me at my handle at Brandon Van Zee. And we appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we have a presence over on Facebook. Feel free to join our group at the web address you see embedded in that logo in front of you. All right, let's jump into our action here today. And as you can see, I've got chart 4B pulled up here in front of us. Remember, if you're a premium member of Market Scholars, you'd have access to all 50 of our customized charts that we use during our various presentations. This particular setup is basically a four-grid that will look back over the past 3 months using daily candles and look at the four major U.S. equity indices, with the S&P 500, the chart that you see in the upper left-hand corner. And as you can see here, we've got this nice new high label hovering over today's candle. We also have this green label kind of showing up above the chart that says yearly high today. And that is the first time that has appeared on the S&P 500 chart since February. It was about 6 months ago on the nose when we last hit a new all-time high on the S&P 500. The NASDAQ also has that label, but for it, it's been hitting new all-time highs quite regularly recently, so it's not as big of a deal there, but still worth noting. The NASDAQ led the charge today. It was up 0.73%. You can see a new high tag on top of today's candle. And, we can clearly see that we're still traveling higher. Higher highs and higher lows. A clear trend has been established. Those of you that watch this video regularly will know that we've been pointing out whenever the NASDAQ has given us one of those bullish intermediate confirmation signals, saying those are buy the dip signals. And that one in particular I remember because it actually had the more idealized setup right there with the blue line between the 50 and the 20. So somebody who would have bought the NASDAQ when it looked kind of ugly on that particular day would obviously be hitting new highs here today, as a lot of those work from home and other software and technology-oriented companies were leading the charge today. Now you'll notice on the right-hand side that despite the S&P 500 and the NASDAQ hitting new all-time highs, the Dow Jones and the Russell 2000 actually both finished lower on the day. The Dow Jones was down 0.24%, the Russell 2000 was down 0.99%. So a little bit of a strange day in which you see two of the indices hitting all-time highs and the other two actually closing lower. Now, those of you that have been around the block long enough will probably start to wonder in your head, okay, well, how is that happening? And come to the conclusion that it's likely the mega cap technology-oriented types of companies out there that are kind of leading the market on a day like today. And that indeed was the case. I think Amazon is probably case in point as a company that would explain what we see here today. So as an example, if I were to pull up Amazon, it's, of course, one of the 5 largest companies in the United States from a publicly traded perspective, and it was up 4% today. You can see a really nice bounce up and away off of that rising 30-day moving average. You actually got your bullish posture back on Amazon as well. But remember, the Amazon being up 4% is going to tremendously help the NASDAQ composite and the S&P 500. On the other hand, Amazon is not in the Dow Jones Industrial Average, and of course, Amazon is not in the Russell 2000. So it's stocks like Amazon that led the day today. Now, as I mentioned in the intro, one thing that caught my eye is that it felt like the breadth was a little bit off today. Now, it's great, don't get me wrong, I want to celebrate a new high as much as the next person, but the reality of the situation, it just didn't feel like we had full participation today. If you go over here to the Analyze tab on the Thinkorswim platform, and actually, you know what, I take that back. It's on the Market Watch tab, and then go to Visualize. And then once you're on visualization, you can choose a watch list, and if you go into the public watch list here, you can then see the S&P 500, just to kind of bring that up as an example of the most widely tracked equity benchmark on the planet. Well, take a look at what we've discovered here. In today's trading, there were 334 stocks that closed lower in the S&P 500 today. Only 169 closed higher. Think about that for a second. The S&P 500 hit an all-time high today, both on a closing price basis and on an intraday basis, and finished higher itself. Yet within the S&P 500, way more than half of the individual components that make up the S&P 500 actually finished lower today. So, of course, to solve that problem, we have to remind ourselves that the S&P 500 itself is a market cap weighted index. Stocks like Amazon, Apple, Microsoft, Facebook, all of those were higher today, and they're all more important to the S&P 500 than all the other smaller companies that are out there. So again, that's another thing you can do while you're over on this area of the Thinkorswim platform. If you look at Apple as an example, over here on the right-hand side, I'm kind of circling it with my mouse. If you find the ticker symbol, so I'm going to point at it right here on the left-hand side, and if you scan your eyes back to the right-hand side, you'll see that it shows Apple was up 0.83% today. If you look at Amazon, which we've already talked about, but over there it shows that it was up 4.09% today. If we look at Facebook, Facebook was up 0.45% today. If we look at, how about Alphabet? So there's Google. It was up 2.61% today. I think you guys kind of get the point. Microsoft would be over here as well. So there's Microsoft. It was up 0.58% today. So up here at the top, we're seeing these 169 issues that were advancing within the S&P 500. My hunch leads me to believe that many of those minority of total components that were advancing today were large cap technology and communications oriented types of companies that have a bigger influence on a market cap weighted index like the S&P 500. But the traditional stock was actually lower today. So if you look at your portfolio today and you have a widely diversified portfolio and you find that more than half of your own stocks were down today, don't fret. That's the way it was in the market today, where really it's those core leadership kind of trending momentum types of stocks that we talk about in my top-down trend trading class on Mondays that were kind of leading the market here once again today. Anyway, I thought that was fascinating. Let's go ahead and take a look at another chart. And in this case, we're going to go ahead and take a look at, how about our 3 green arrows chart. This will be chart 4D. And while we're over here, we do have some new information to report. In fact, we have 2 different things I'd like to point out, both on the bottom rung here. First of all, the NASDAQ was up enough here today to get its 3 green arrow status back. We got that because of that MACD histogram that I was mentioning late last week that was getting awfully close to converting back to a green arrow. We officially were able to achieve that here today, and therefore the momentum is back with that particular security, and that green background color reminds us that we do have 3 green arrows. Remember, we also have a green arrow down below on the stochastics. Down here, this is a phantom green arrow at the end of July. I can't show you the 3rd green arrow on the moving average itself because the NASDAQ has literally been 3 green arrow status on the 30-day moving average for over 3 months at this point. In other words, it has not closed below the 30-day moving average during that entire time. That's quite remarkable consistency there out of an entire index like the NASDAQ composite. The other thing that I should point out is that the Russell 2000 lost its 3 green arrow status today. You'll notice that it was the momentum or the MACD histogram that once again was the culprit. In this case, took away the green arrow that was in place since August 3rd and now has a red arrow as we're starting to get some negative momentum come into that small cap universe there. Otherwise, the S&P 500 and Dow Jones Industrial Average at this moment in time continue to have 3 green arrows. In terms of the 1040 crossover method, I'm sure we don't really have a change there from what I reported last week, which is we do have bullish crossovers across the board. So I don't really have anything to add there other than just to recognize that longer term trends are generally holding up okay. And of course that makes sense on a day when the S&P 500 hits a brand new all-time high, just barely eclipsing where we were back in the middle of February. Let's get into some 12 grid analysis now. And let's start with the asset class 12 grid. I wanted to discuss the US dollar here briefly as well. The US dollar is the chart that you see in the lower left-hand corner. And remember, when we're looking at these 12 grids, the background color of the chart will tell you what the current posture is according to the intermediate line on the market forecast technical indicator that you can find over on Thinkorswim. So the chart in the lower left-hand corner is the US dollar, and as you can see, it's that dark shade of pink as opposed to like this light pink you see off to the right-hand side here with real estate. So the dark shade of pink reminds us that we have a strongly bearish posture on the US dollar. You can see the intermediate reading is at 10.29 and falling. Now remember, anything below 20 we consider to be strongly bearish because it's in the lower reversal zone. So this is a really ugly move that it's made here. In fact, we are at 3-month lows at this point with today's continued sell-off. This is actually the 5th straight day of the US dollar selling off. And you know, we've mentioned this time and time and time again over the last few months. Multiple times I remember reminding you guys that there were brief moments where the posture went to weekly bullish, but I said I wouldn't put too much emphasis on that, considering we continue to be trading below a falling 30-day moving average. And of course, those of you that would have kind of respected that mindset likely would not have gone bullish on the dollar. And that has helped maybe support other trades that you've been looking at, as many of you understand the intermarket relationships that take place based upon the US dollar. In particular, commodities tend to fare a little bit better in a weak dollar environment. And you can see the two charts just to the right of UUP are that bright green color, telling us that we have strongly bullish postures on gold and on oil. Now, oil was actually down a hair today, but it remains above a rising 30-day moving average and continues to have that strongly bullish posture according to the market forecast, because the intermediate line is in the upper reversal zone above 80 in this case. Gold, of course, has been on quite the move this week. Many of you probably heard, especially if you're following my Twitter feed, a quick plug on that. I actually released Warren Buffett's holdings before CNBC and Bloomberg did. It's not often you get a chance to do that, but I'm somebody who, as I mentioned on Thursday's video, I track Warren Buffett's holdings quite closely. And so I was updating the Securities and Exchange website, hitting refresh over and over because I wanted to be one of the first to report it. And I think there was a gal over at Yahoo Finance that beat me to the punch. But otherwise, I was pretty much one of the first people to report upon that. And the very first thing that, and the very first ticker symbol that I listed in that report was Barrick Gold. And this was after hours on Friday. And at that time, you could have bought it for, I think it was around like 27 bucks. And that particular stock ended up ripping. I think it ended up today at around 30. Yeah. So you can see the major gap up that took place from Friday to Monday. And some of you that would have been buying Barrick Gold after hours on Friday might have made a very nice amount of money in that particular case. So quick plug that if you're not following me on Twitter yet, that's an example of why you might want to be following me on Twitter if I'm going to be able to get that information to you sooner than that information gets out to other traders that are out there. Now, again, I can't profess that that's going to happen every time. That happened to be a very unique case where the market was most definitely not expecting Berkshire Hathaway to take a position in a gold mining stock. And from my own perspective, in case some of you were wondering, I personally don't believe it was Warren Buffett himself that bought that Barrick Gold position because it was only about $500 million worth. Typically, if the purchases are less than $1 billion, those purchases are either Ted or Todd, his two lieutenants that also work over at Berkshire that have full discretion over their own portion of the Berkshire investment portfolio. Regardless, the fact that Berkshire Hathaway as an entity has now bought gold mining stocks was a bit of a surprise to the market, and I think that's really aided in gold's nice rebound that we had here in the last two sessions on Monday and Tuesday. Gold made another big move here, and it's good to see it kind of recovering as it was approaching its rising 30-day moving average down there. Some of you will recall that I think it was in last week's video, a week ago from today, where I presented that bullish trade idea on silver. And of course, silver tends to move in unison with gold, and you can see here after that sharp sell-off a week ago, it has rebounded directly right back to almost its old highs again. So gold and silver continue to be in their respective trends, and I think they were aided over the weekend by the news of Berkshire Hathaway establishing some presence in a gold mining stock and kind of giving maybe a little bit more credibility to that entire asset class of the precious metals and their respective miners. Anyway, up at the top of the 12 grid here, you can see that we have green charts across the board. In fact, we have a overbought cluster signal on the preferred stocks. We don't talk about those a whole lot. They don't move around a lot, but preferred stocks have been in quite the uptrend here recently. And then we do have, obviously strong global markets as well, whether you're looking at the developed foreign stocks or the emerging foreign stocks. They were down a touch today, but they remain very strong. In particular, the emerging markets up about 20% in just the last 3 months alone, which is beating the S&P 500. So don't fall asleep on some of those other areas across the globe. They can offer some opportunity here for traders as well. I did like the bounce that we saw out of high yield bonds today. You'll see HYG here kind of in the middle rung of our 12 grid. And I really like those types of situations where we have a pullback to the rising moving average. It uses it as support and bounces up and away from it. And that is what we've done the last 2 days on high yield bonds as well. Let's go ahead and now take a look at another set of 12 grids. In this case, it'll be the U.S. sectors 12 grid. And as we pull this up here, you can see that we do have 3 different charts on the board that now have that light pink color, and that would be the financials, energy, and utilities. All 3 of those have the light pink shading that represents weekly bearish posture. That occurs when the intermediate line is falling between 80 and 20, or just simply residing in the lower reversal zone below 20 regardless of its direction. Well, in all 3 of these cases, they are falling kind of from the upper reversal zone and falling lower. So you'll notice in the label, it will show you what the intermediate reading is on the market forecast right now. So 75 for the financials, 71 for energy, and 76 for the utilities. In all 3 of those cases, of course, it says falling next to it, kind of giving us an indication. Remember, when you have these 12 grids, if you wanted to examine that yourself, you do have the ability to, I try to show this on occasion, but if you right click on the chart and then go to maximize sell, it will basically blow this up to a full screen, and you can actually see the market forecast indicator down below. And this is what I was referring to. That green line has fallen out of the upper reversal zone and has now started trending lower below 80, and therefore giving us that weekly bearish posture in this particular case. So again, if you're a premium member of Market Scholars, don't forget about that particular feature in case you're ever curious about it, investigating it yourself. Now, in all three of those cases, notice that we are still trading above rising 30-day moving averages. They are not the best trends on the board. There are a lot better looking trends out there, but I don't want to just completely dismiss all three of these charts either, because there could easily be a support bounce just around the corner under the right set of circumstances for the overall market. Now, in terms of the the worst performer here today, it was energy. It was down 1.26% today, so I know stocks like Exxon and Chevron were struggling today, and that kind of put a little bit of a wet blanket on the Dow Jones Industrial Average pursuit for its own record highs. So those big lumbering giants within the oil space kind of struggled here today. In terms of who is the leader here in the market today, that distinction goes to communications. And for the reasons I mentioned earlier, Facebook, Alphabet, those types of companies did quite well here today. And that also reminds me that as we look over here on the internet now, I put out the sector selector over the weekends, and on Friday night's rankings, we did see communications continue to work its way up the rankings. So these are kind of put together on a week-by-week basis. So week over week, we saw communications go from number 4 up to number 2, and the week prior to that, they were actually down here at number 6. So they've gone from number 6 to number 2 in the rankings in just 2 weeks. So that's a pretty quick recovery there. Remember, communications were also kind of leading for much of the last 3 months prior to that. So it was just kind of a weird dip out of nowhere where some of them kind of fell out of bed, but they recovered very, very quickly in that particular case. We also saw industrials and discretionary in the top 3 for the second straight week. So in yesterday's top-down trend trading class, we focused on a discretionary sector and reviewed 3 trend trades out of that particular sector. And the stock that we ultimately bought, which was an online retailer, is already up about 4% since just yesterday. So already making some pretty decent gains out of the gate for that. So if you're curious about which stock we selected for my class portfolio, feel free to check out that recording from yesterday's class if you're a premium or a plus member of Market Scholars. I also wanted to point out while we're over here that healthcare really kind of fell out of bed. Notice that healthcare is now ranked 7th. Now, one thing I try to remind you guys of is when I put these rankings together, this is on an equal weighted basis. This is not a market cap weighted basis. So there could be some distinguishing elements there depending upon what you're looking at versus what I'm looking at. But this is kind of more of a broad picture of the various sectors out there. And we have seen healthcare starting to stumble here in the last couple of weeks. We were at number 1, we then fell to number 5, and this past week we fell all the way down to number 7. So remember, healthcare had been one of those leadership areas as well, and it's starting to stumble a little bit on a relative basis. Basically, what we're seeing is more cyclical areas like industrials and discretionary kind of taking a leadership role. So it's not that healthcare is doing really poorly on an absolute basis. It's just starting to struggle a little bit more on a relative basis. I'm pointing that one out specifically because our trade application example will be a bearish trade that comes from the healthcare space. So I wanted to kind of have you put a pin in that and remind you of why I might be doing a bearish trade in that particular area, because we are starting to see a little bit of a breakdown in some of those healthcare names. Also, while we're over here on the internet, always like to say thank you to those of you that click like for me on Twitter. The last time I did the video on Thursday, 105 of you did click like for me there. Remember, if you want me to do a full-fledged 30-minute version of this video, then you're going to want to click like for me on Twitter. If we can get up and over 100 likes, I'll do that. If we fall below 100 likes, then I'll do a shortened version of it. So if you prefer kind of an abbreviated 15-minute version of the video, where maybe we don't do a trade application example or something along those lines to save time, then don't click like for me on Twitter. On the other hand, if you want the full-fledged version that we can deliver to you for free, as we typically do here with these YouTube videos, then we would simply request one simple thing out of you. It just take 5 seconds out of your day to click like for us there on Twitter. It helps us spread the word about our fledgling company to a much broader audience than we would be able to on our own. So we really appreciate those of you that commit to doing that each and every day, in return getting this commentary from David and I on a regular basis. All right, let's get back on over here to the Thinkorswim charts and talk about our trade application example now. And as I mentioned before, it's going to come from the healthcare space, and I'm going to pull up chart, let's do 3A in this case. And the stock in question is going to be AbbVie. This is a company that some of you that have been to my dividend classes over time, by the way, I taught my dividend growth investing class earlier today where we reviewed two different technology stocks versus one another. So if you're interested in that head-to-head matchup, that recording is available for premium and plus members on our calendar. But AbbVie is somewhat well known within dividend circles because it is a dividend aristocrat. It's a company that probably deserves an asterisk next to it when talking about it as though it's an aristocrat. And the reason for that is, the dividend aristocrat list is meant to be a group of companies that are in the S&P 500 and have raised their dividends for 25 years in a row or more. AbbVie is a little bit peculiar in that regard because it didn't even exist 25 years ago, let alone could have raised its dividend that much along the way. So the reason that they are an aristocrat is that Standard & Poor's made an exception for them. They were actually spun off from Abbott Labs here about, I don't know, probably 8 or 9 years ago at this point. But anyway, Standard & Poor's allowed them to kind of retain the parent company's dividend streak and allowed both AbbVie and Abbott Labs to stay on that dividend aristocrat list, which is made up of about 60 companies. So anyway, AbbVie is a pretty well-known company in dividend circles. In today's case, I actually want to take a bearish trade on AbbVie. It's not meant to say that I don't like the company for the long term or anything like that. It's to mean that in the short term, things are looking maybe a little bit less than ideal. So I want to see if I can try to take advantage of that from a trading perspective here today. You can see that AbbVie has underperformed the S&P 500 over the last 3 months. The S&P 500's line is up here. AbbVie's price candles are well below it. You can also see that AbbVie was doing so poorly a couple of weeks ago that it actually put in these oversold cluster signals here. And is oftentimes the case, we had a rally higher, a reversion to the mean after those oversold clusters. So at this point, now the question is, where do we go from here? And with us clunking our head up against that downtrending 30-day moving average in the last couple of sessions, my hunch is that we may very well kind of stall out in this particular area here. I'll also show you that we can probably make the claim that we have a bearish near-term divergence on our hands as well, as we have peak number 1 on the near-term line right there, peak number 2 on the near-term line right there. The two candles associated with those two levels are this candle right here and this candle up here. We had the candle price action going higher when we had the underlying indicator going lower. That's known as a bearish near-term divergence. So we've got a couple different things there working on our behalf for this underperforming stock versus the market over the last 3 months. And so what I thought we would do in today's case is what's known as a bear call spread. In fact, some of you are already aware of this. As I mentioned last week, I was frustrated about that silver trade that we did a week ago. And I was saying that if I can try to rearrange my schedule a little bit more, I might be able to put the trades in during the day and then send that information out to those of you that are premium members of Market Scholars. So all the rest of you that just watched the free YouTube video, this would not be something you'd be entitled to. But all of you that are premium members of Market Scholars, you have access to what's known as the Telegram app that we use for trade alerts for our normal premium trading rooms that we teach throughout the week as well. And so here is our Telegram app where I sent that out. Now in today's case, I had to go work with my kid a little bit. He had his first day of kindergarten here today, and it was only a half a day. So I do apologize for sending this information as late as I did. I got it out to you only 6 minutes before the market closed. I think normally I'm going to want to get that information out much sooner than that, so you guys have a chance to kind of evaluate the trades on your own prior to the market close. So I'll work on that with my schedule when I don't have as many personal things going on there like I did today. But again, just kind of stressing that if you are a premium member of Market Scholars, make sure you're signed up for our Telegram service, so that way you can be alerted to not only any trades that we're taking for our trading room, but also for these market outlook videos. That way you get an opportunity to review these trades before everybody else that's just watching the free video has that opportunity to do. Also, since I'm looking at this, a reminder, we had some issues with Thinkorswim here today. There is a web-based Thinkorswim platform. It operates in quite a bit the same way like the normal software. So I also sent out that link there. I don't work for Thinkorswim or TD or Ameritrade. Remember, we used to have an affiliation with them, but no longer do. So that's not me telling you that officially, just trying to be helpful for those of you that struggled getting into your Thinkorswim platforms today. They do have a web-based version of it that does update with real-time quotes and different things like that. That you might want to explore if you're having those problems, because for the last 2 days we've had issues getting into our Thinkorswim platform. Right now I don't have an issue, thankfully, but earlier today we were. So anyway, just wanted to throw that out there. I'm going to see how this goes, see if I can work it into my schedule where I can let you guys know before the market closes what trade I'm doing for the market outlook video. And as you can see down there, what I ended up doing was I sold the September 25th weekly call options. I sold the $100 call. I bought the 101 call, and we got 24 cents for that dollar-wide spread, which is basically a 30% return on risk, which is what we typically shoot for. So again, want to stress that's not the normal monthlies that I typically do during these presentations. This is 1 week after the monthly expiration in September. The reason I did that is because the monthlies only had $5 wide between their strike chains. The weeklies had a $1 wide that was more achievable for a 30% return on risk. So basically I'm selling the 100, buying the 101, collected a credit of 24 cents, and what that looks like on the chart then would be kind of in this general vicinity. I'm kind of trying to draw it a little bit chunkier there, but you can see right here is where basically 100 is. So what I'm hoping for is that we get a push lower off of that falling moving average for ABV. Now if that doesn't happen and we start poking our head above that falling moving average, as long as it doesn't go above kind of these colored lines that you see here, we would still make money on that particular trade. If this stock ends up breaking out above its prior highs, then all bets are off. We'll probably lose money on that trade. But until then, right now we've got at least some indication of bearishness on ABV's chart at this moment in time. So we'll add a rare bearish trade to our portfolio, since most of the trades I've been doing recently have been bullish. It's nice to kind of balance things out a little bit there on occasion. So anyway, that's your trade application example for the night. Again, appreciate you guys checking this out. If you like these full-length versions, I would encourage you to go over to Twitter and click like for me on this market outlook related tweet. Remember, you can also do that on our website while you're watching the video over there if you'd prefer. Tomorrow, David should be back with you, so make sure you're taking a look at his videos as well. And then I'll be teaching my factor-based swing trading class tomorrow morning, where I've got great news to share there. We've actually had 2 straight days where we've closed out our swing trades at max profits. So I'll be spending some time reviewing those trades tomorrow and then looking for some more opportunities for those of you that are premium members there. And then David will be teaching his options inventory a couple hours after that. So lots of great stuff coming your way from Market Scholars. Make sure you're checking it all out. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.